Welcome back to Political Singularity. My name is Evan. Political Singularity is the show that tries to bring the left and the right together and find common ground. Today, we have a big story out of Asia. It actually came out yesterday, last night. According to CNN, China signs huge Asia-Pacific trade deal with 14 other countries. China, in its plan to rise to create a dual hegemony with the U.S., just signed the largest free trade agreement ever. It encompasses about 30% of the population and about 30% of the economic output. In other words, China just took over Asia, or tried. This is historic for many reasons. 30% of the world's population. Asia is a huge destination for both sea trade, rising economies. But I want to talk a little bit more about how it affects the U.S., how it affects the world, and how it affects the EU. So first, where did they get this idea? They say that it's been under negotiations for 8 years. They have an ASEAN, ASEAN travel card that's been going on for at least a decade now. Where did this idea come from? It's true that it's been under talks for a long time, but what was the real wake-up call was when Obama, back in 2015, tried to pass the TPP. A lot of my viewers will recall what the TPP was, the Trans-Pacific Partnership. It was a free trade agreement with the U.S. and Asia. It pretty much was the same thing, except there was one country that was notoriously absent, which is China. At the time, they didn't want to say it publicly, but at the time, the back rooms in the State Department said it was a play to isolate China. They wanted a TPP, a free trade agreement between a Western country like the United States, New Zealand and Australia are in that region of Asia, so they threw them in as well. But the real aim was to isolate China from its neighbors, to isolate a lot of those upcoming countries like Cambodia, Thailand, countries that have 5% economic growth or more per year. As China's rising in the world, the U.S. wanted to make sure that we could kind of isolate them from their immediate trade bloc. Because of this, China started the Belt and Road Initiative, which I'll talk about in another video, but that's essentially a trading scheme in which China is trying to develop its neighbors, give them loans to develop highways, and if they can't pay back the loans, China gets to use the highway or the seaport. It's an ingenious way not only to make money if they pay back the loan, but also developing a customer base in Pakistan, developing trade routes that go west into Eastern Europe, Moscow, Eastern Europe like Poland, Germany. It would be very good for them because they sense the tides are turning and tensions with the U.S. might increase, which at the time of us speaking in 2020, the U.S. and China were the largest trade partners pre-pandemic. So, Obama created the TPP in an effort to isolate China. When that failed because of certain political problems with it, there was some logistical problems with giving U.S. corporations or other transnationals power over U.S. environmental laws. There were a few big problems with TPP. And when that failed, China took this opportunity to create their own. This is basically a rehashed TPP with China at the center instead of the United States, and notoriously, the United States is missing. We're not involved in this at all. So it was a move to retaliate against the US's TPP plans. It was a move to promote China's One Belt, One Road initiative, Made in China 2025, and other efforts they have of growing to a regional homogeny in Asia, which, as of this recording, I would say they've now accomplished. I would now say China is a regional hegemony in Asia, and they're only going to increase. So let's talk a little bit about the macroeconomics, about how this will affect China and how this will affect the US and how it might affect the EU and the rest of the world, and how it will affect the Indochina countries of Laos, Thailand, Burma, Myanmar, and so on. So the first thing that you need to realize is in terms of capital, because when it comes to capitalism or free markets, capital is very important because you need someone to build the factories, to pay to build the factories. You need someone to pay the workers. Even if they're only making a few dollars an hour, you still need the capital to pay them. And in countries like Laos or Thailand, even though the economies are growing, you don't have a lot of quote-unquote millionaires to invest in starting businesses. So part of this free trade agreement will allow China and Chinese firms to go and set up shop in other countries like Asia, Thailand, Laos, Burma, Myanmar, I believe is what they want to be called, Indonesia, Malaysia. They have deals with Korea and Japan, which are geopolitical rivals of China. So it looks really good for China on the whole. Like with any free trade agreement, the lowest 2 to 3 levels of Chinese society will probably be more hurt by this than anything else, but this will cement China's geopolitical rise. It will benefit their economy. The upper class of China can go and set up shop in other countries and then export back to China. So what happened with the US back in the 80s, 70s, when we really started these free trade agreements with, permanent normal trade relations with China, WTO, relations with Mexico and Canada. Canada not as much because it was a developed country, but whenever you do deals with countries that are poorer than you, China and Laos, for example, if it is a free trade deal and China does not do enough to protect itself, they will see Chinese firms creating that product overseas and then trying to sell it back to the Chinese people, often maybe even at a cheaper price than they could make it in China, but they shipped all the jobs away from China. China needs to worry about low-skilled jobs going away. They have a huge population. The Chinese are industrious, but whenever you allow free trade between a poorer country and a richer country, you tend to see low-level jobs, manufacturing jobs, going overseas, and those jobs don't come back. They create factories and they export the product back to the buying base, which now is 10% less because 10% of people don't have jobs. China does have plans to combat this. Some things they've said, and I speak Chinese. I've talked to a few people in China about this. I've talked to people who understand and are familiar with this issue. Their plan is to modernize, obviously, continue modernizing, but they want to start taking over service sector jobs. So in the same way that the U.S. went from a country that manufactured a lot to now a more service-based economy, that's a trajectory China's following. They don't want to be the manufacturer of the world anymore. They want to give that to poor countries. What are my thoughts? How will this affect things going forward? Well, the first thing you need to consider is China is going to now compete for service level jobs with the US. So, for example, what's a good service-based economy? Service-based industry. For example, business, accounting, or programming, for example, making websites and apps, service sector jobs are going to now be under fire from countries that are now second world. China now officially is not a third world country. If anyone would have said, I've been to China, there's parts of China that are more first world than anything you'd find in the United States. So China is a rare project, or a rare country, because you can see both ends of the spectrum. But as of this trade deal, China is no longer going to be treated as a third world country in trade. If anything, they're going to be started to treat like a first world country, and a lot of manufacturing and low-end jobs, I believe, will go overseas. How does this affect countries like Laos, Indochina? Well, since they are a poorer country in this dynamic, this is nothing but good for them. This is nothing but good for them. Free trade agreements with richer countries almost always benefit you. People say, oh my God, they only pay $2 an hour. And again, there are, reports of slavery in parts of Africa and stuff like that. Diamond slaves. There are problems. But by and large, whenever you can get the world economy involved in countries, they are better off in the long run. China is helping develop, indirectly through the power of capitalism, all of these countries in Indochina, South China Sea, Philippines, Malaysia, Indonesia, which Indonesia is, I believe, the fifth largest economy now, 220 million, almost as big as the US. China, they cannot, but this is very, very good for them. This is good for the countries around them. All the countries that are now going to trade with China are pretty much only going to benefit if the Chinese government allows access to their consumer base. Now, deals of a deal and specifics of a deal have only been released in part so far, so there's still more we need to know. I'll update you as I figure out more. But if China allows access to the Chinese consumer base, no restrictions, like as some people are saying, this will be a game changer, and this will probably be the most famous trade deal of all time. This will draw NAFTA. This will be probably as big as the US-China permanent trade relations. This is going to be huge. If you are an international investor like I am, always looking internationally as well as domestically, I predict that, international stocks, Asian stocks, will probably go up in the 20 to 25 year time frame. It might not be immediate. Let me find out what the Asian stock market is doing right now. Asian markets are all up. Yeah, they're all up big time. But I don't do short-term investing. I just look at it as a good way to lose money. I only look at long-term. Long-term, I believe Asian markets will be good. If you're in the United States and you're in your 40s or 50s and you can afford to spend $70,000 to $100,000, you should consider trying to buy an apartment in one of these countries in a capital city. I predict that real estate is going to go up as Chinese capital is now able to go into other countries to build businesses, to buy houses. It's already a problem in Australia where they're propping up the house price. It's going to continue all over. Very, very exciting. Very, very exciting things happening. I think it's going to be good for China as a whole. I think that how it affects the U.S. and indirectly EU, how does it affect Mercosur, which is another huge trade bloc in South America, that's going to be a little bit more complicated. And I'll get into each option. So, how will it affect the U.S. and indirectly Canada, NAFTA? I think it will actually not have as big of an effect on the everyday life of the ordinary citizen. I think that a lot of manufacturing has already gone to Mexico or other countries like China anyway. So if you are a lower class American, you're hurting anyway. I don't think this will really change your life in any substantial way. If you're an upper class American, as I said, I think there's opportunities to invest. But besides that, I don't think the U.S. from a financial perspective will be hurt by this. Unless they try to start the tariff next year, they decide as a group that they're going to tariff American goods, which is possible. It's possible that we're going to have geopolitical angst because of this in the future, which is something that we've been, having already for a while with China. It's another WTO. A lot of the damage to the U.S. economy, I believe, has already been done. The manufacturing is pretty much already gone. So, a lot of these poor countries like Laos, Indochina, that are now doing deals with China, that won't affect us at all. A lot of those countries, we use them as well. We make Nike shoes in the Philippines, I believe, or a country like that. I mean, we do trade deals with them anyway. So, if anything, it could raise prices in those countries, which could maybe affect purchase price over here after a certain time, as those countries which we already use, as they continue to get Chinese capital and investment and grow and become richer on their own, it could in turn make prices negligibly higher for us. But I don't really anticipate anything bad or bad price rises from this. I think there are geopolitical concerns, though, which I outlined before. China's trying to become a hegemony in the region. I believe they're already there. I do think that on a long-term scale, it is good for the U.S., though, and indirectly Canada, EU, any modern Western country. Whenever you have more rich people joining the game, you get more countries online. They have internet now, and people aren't dying at 25 years old from gangrene and tuberculosis. They are able to survive and be productive in the world economy. I predict that this, mixed with internet boom, which I believe we still are in, began in the 90s, but we are going to an area of efficiency that we've never seen before. I believe that this will be probably considered the golden age in 50 to 70 years. We are now in the, or should I say, Silicon Age. A lot of political theorists, economists like to call the rise of AI the Silicon Age, so that's what I'll refer to it as. If we can get more countries online, make more countries rich, the world productivity and GDP will only go up. Now, GDP is not a good representation of what a country is doing. I prefer median income and median net worth or average net worth. If we can make people so they're not starving, if we can help the people in Laos, or China can help the people in Laos by doing a free trade agreement with them to develop, those people can be more productive in life, and they might make inventions like vaccines, for example, which you see coming out of China. No matter what you think about it, having China or Laos or Thailand trying to make a vaccine for COVID-19 is a good thing. It's good to have more productive people. It's good to have India trying to find out ways they can go to the moon. It's good to have that competition of innovation, because I predict within 20 years we're going to have medical breakthroughs that originate in Asia. That's going to be very good. So a lot of Americans look at this and they say, oh my God, we either messed up the TPP, we couldn't get the TPP, we should have gotten it, and they're angry. Or they think, oh, well, China's making a mistake doing trade with these poor countries, or these poor countries are now going to be taken advantage of, or, oh my God, China, geopolitically, China's taking over, a new Cold War. But my impression is different than all of those. I think that in general it's a good thing. Asia is adapting, Asia is evolving. China is becoming a regional hegemony, which is something the U.S. needs to think about. But at the same time, I also don't think the U.S. should be the policeman of the world. I think we should focus more on our own country and our own people. I like the Swiss approach, where Switzerland hasn't been in war for hundreds of years. How is that? They are able to deal with conflict effectively and not get invaded, and they're in the center of Europe. So I think that in general it will be good. It will help us with technological innovation. The short term and medium term will probably be a continuation of the rise in Asian stocks, which, if you invest for the long haul anyway, you'll make money. But I also predict Asian properties to rise. I predict the top percentage of Chinese society, of Chinese businesses, to now really become multinationals. A lot of major Chinese businesses, rather Huawei or Tencent, pick one, a lot of those are really at the core Chinese companies. Even though they do business, for example, Tencent created TikTok, which is a worldwide app. They just had to do a deal with Microsoft to have it, or I believe Oracle, to have it, keep it in the United States. But they are fundamentally Chinese companies. And now with this free trade agreement, we might see a lot of these Chinese companies become more gray-faced, multinational. So it's going to be very interesting to see what happens. This is huge for the world. I think it's a net benefit for the U.S., EU, Canada. I think having the ability of having more people that are not starving day to day allows the human race to advance faster. I've predicted before that I expect us to have somewhat open borders within 200 years. If you have a United States passport like I do, you pretty much have open borders already. I predict that these free trade agreements will lend and become more of like an EU style, work where you want, set up capital where you want. I think American investors who are savvy can benefit from this. And I think that in general, it's possible that this, I don't want to get too overly dramatic, but it's possible that free trade agreements like this could cure cancer someday. They will advance these countries. These countries in Indochina, Myanmar, Indonesia, Malaysia, those countries are going to probably have their GDPs, which is not the best thing, but they're probably going to have their median income and median net worth of the average citizen. I would not be surprised if that went up by about 25% in the next 10 years because of this deal. Well, thank you. If you guys have any comments, questions, concerns, please leave a comment. I'm happy. I read every single comment. I'm happy to answer them. Have a good day, guys.